We are back to start off another great week in the markets. Things are looking a little choppy so far today. We have fear of contagion. Word of the day, contagion in China once again. We're going to be discussing all of that, looking at the week ahead and more on Money Never Sleeps. Video?
Oh, sorry. It's not Wi-Fi. It looks like it stopped. Sorry about that, man. I don't know what happened, but you froze completely on me. I couldn't hear anything. I might as well have been underwater.
Once again, Comcast, awful. Never going to sponsor this show. But thank you for watching Money Never Sleeps, everybody. Before we get going, hit that like button, subscribe to our channel. Things start off a little bit smoother than that usually if this is your first time watching. Nothing that Kevin or I say is financial advice. We're not financial advisors. We're a few guys who love following the market. So please do your own research before making any buys or sells. Kev, we're seeing a little bit of, I'll say, trepidation, if I'm trying to use a fancy word, in the market so far as we wrap up the first day of the week. We see, a few outliers that are really ripping today, including NVIDIA. We'll talk about that in a little bit. But for the most part, there's a lot of just chop going on as we're trying to find the direction that equities want to go. I mean, as always, crypto is just stuck in this boring range. It doesn't really seem to want to go anywhere. It is just on life support. So what are you really looking at as we wrap up the first day of the week in what is going to be, unless some news breaks, a fairly uneventful one in the markets?
Absolutely, yeah. I think the number one thing I've been keeping an eye on is the currency wars. Again, there's no real currency war. It's just taking a look at all these currencies that are absolutely down against the US dollar. I mean, we could talk anything from the ruble to the yuan to the yen to the Argentinian peso. Absolutely wild, some of those charts. We'll take a look at some of them. But I think that currency has been absolutely something that interests me. I think the news about Burry coming out today, pretty impressive considering we were talking about shorting the QQQ and the SPY just a few days ago on the last show. And yeah, crypto's in this weird state. And we're going to take a look at some of those weekly charts and maybe it'll give us a pretty good idea of what the next direction is for the market, even if everything seems boring as shit, which it is.
Yeah, so let's just quickly talk about what's coming out this week that might impact markets. We have some retail sales data tomorrow. We have Minneapolis Fed President Kashkari will be speaking as well. The sales data could kind of give us a little bit of a hint as to the health of the consumer. That's something that the Fed is constantly keeping an eye on. We'll get July FOMC minutes on Wednesday. So a better view of not just what Jerome Powell thinks, but what all the Fed presidents think. We'll see the latest dot plot. So for those who don't know, when the Fed meets, there's kind of a dot plot around who thinks that the interest rates are going to have to go to what ranges to get inflation to their mandate of 2%. So we'll see a better idea of the spread and how aligned the Fed is on their future actions. That could be pretty interesting as well. You mentioned quite a few things at the top. Let's quickly touch on the Bitcoin ETF, which has been a talking point all over Twitter or X, whatever the hell you want to call it now. It seems unlikely that the Bitcoin ETF is going to be approved by the SEC as it stands today. That was a piece of news that has been kind of spreading around. I don't think it should be too surprising based on the actions of Gary Gensler and how, all the pushback that crypto is getting federally. So any other thoughts on that as far as, its impact on it doesn't really look like it had much of a price impact. We've seen Bitcoin trading in this 29K range, trying to get past 31, trying to get up to 30 again, not really happening. What do you see in the weeks and months ahead for Bitcoin?
Yeah, I think the Bitcoin ETF really makes me a little bit upset because I think it's another thing very similar to the SEC versus XRP case, where we found that XRP is not considered a security and that it's a hope, wish, and a prayer that the market's going to come back, right? And maybe it is, right? Maybe the market does come back a little bit and buys up some of this news or going into this to the point where, it's going to pump and liquidate a lot of positions. That's what I think. If this does get approved, I don't think it's going to get approved now. I really don't think that we're going to see anything until maybe March of next year, any update on it. But I think that we're kind of in this place where alts aren't necessarily going to push up unless Bitcoin does. And if they do push up, it's not going to be substantial, right? It's going to be pretty insignificant, in my opinion. I think that we're going to see the potential for Bitcoin to push up a little bit here. But, even if we do push to the 35K level, I think we got to be careful of that 31, 32 that we've always seen resistance at, right? It's very possible we just top again at that and we get rejected. And that would absolutely screw a lot of people who are going long, and then a lot of people who might be going short a little too early. So it's a really wild time for Bitcoin. It's been boring as could possibly be. It's been in this range. We shot up a little bit earlier today, but we're right back to where we started at the open. And it couldn't be more bored by the charts, but there's definitely some good info if you're looking deep into the charts that can give you an idea of the direction of the market.
I mean, it's just been months of chop. We'll see the occasional move up and down for a day or two, and then just head right back into the same range. And we looked and we zoomed out at 2019 and saw what happened there. And like I said before, I wouldn't be surprised if we continue to kind of have this similar movement for quite a while now. We'll see what happens early next year with the halving, but it wouldn't shock me to see this continue to just range and be boring. I don't know the ultimate outcome of it all. I'm hoping that long term it starts to go up, but I've been buying a little bit here and there just to accumulate a little sum. Like, I'm not expecting a huge pump or anything. I'm not expecting it to die the same way that you are, Kev, but I have my levels where I really want to buy, and we're still just kind of having to be patient and just sit on our hands and wait.
I don't think it'll die. I just think that the influencers that are showing you the worst possible financial advice just need to capitulate. Like, I will go on record saying that we need a French Revolution to just clear out the space and just get, rational and sensible human beings out there giving you just facts and not necessarily promoting any products to you. But I'm still bullish on Bitcoin long term. Obviously, I really don't care about this Bitcoin ETF for the time being, because I think we have bigger problems. And if the macro remains unchanged, then what are we getting excited about when it comes to Bitcoin ETF? That's like getting ice cream and the next day going to jail. It's pretty much what you're getting if we look at how this is going to play out. I mean, it still sucks long term. You're getting ice cream today, but tomorrow prison.
I don't know. Okay,
it's a great analogy.
It's a great analogy. He says, okay. We had news today coming out from one of our favorite guys, Dr. Michael Burry. Apparently a big fan of our show, because we were just discussing putting in shorts on the QQQ and SPY. And Burry goes, you know what? Hold my beer. I'm going to put in $1.6 billion worth of shorts on the QQQ and SPY. He bought 2 million each of SPY and Triple Q put options. So, totaling $1.6 billion, which is right around, if I remember correctly, what he did for the Big Short back in the housing bubble. So pretty wild to see Burry come in, and just reminding everyone, your size is not size. This is what it looks like. And just dropping it all on the table. Balls of steel, baby.
Oh, absolutely. Balls of steel. The original balls of steel. It's absolutely wild to see it too, right? Because we were talking about SPY and the QQQ, that we're pretty close to an area where it might be pretty lucrative for people to start shorting, right? There might be a shorter time frame where it goes up. Maybe he just said, I ain't got time for that shit. I'm going to go leverage short, put in tons of puts. And now he's also buying yen too, which is really impressive, because what have we been saying on the show for about 2-3 weeks now? That Japanese yen's probably going to go up in value. So clearly, huge fan of the show. It's wild to see how insane Twitter, X, whatever you want to call it, went off once he started putting in these positions. People are saying, "Oh, time for a squeeze," and then other people are saying, like, "Uh-oh, watch out below." Honestly, at this point, I think if we're saying that it's time for a squeeze, a significant one, to the point where it just wipes him out of his position. Come on, guys. How much has it pushed up already this year, right? And we're failing to put in a higher high. To me, I think we're at a point where it's time to just say, okay, the market's cooling down. Volumes are low, at least for crypto. And it seems like things are pretty exhausted.
Let's pull up the charts real quick, just for funsies.
Which ones?
The QQQ? Let's do the QQQ and SPY.
Gotcha. Let me pull it up. Yeah, it's here we go. We got that. You want to see if there's any reaction from him putting in these positions?
Sure, let's do it.
Let's go to the hour. And I got a lot of things that Dr. Burry was looking at here, but it's okay. It's nothing too notable.
Nothing crazy.
No, it's Monday. But yeah, absolutely. It's trading in this parallel channel. This is the thing I was worried about. Not worried about, but I thought that maybe it would go up a little bit higher and fill this gap that we dropped here back in August 2nd, August 1st and August 2nd. Obviously, this is because of Fitch downgrading the US. We saw a little bit of a drop there. I thought maybe because we're putting in this lower lows and lower highs channel that there's a good chance that we could get a little squeeze up to there, then keep going down, carrying out. But yeah, we're at a pretty significant level. I mean, this is the hourly. Let's look at the daily for this. Right. This is the chart. This has gone pretty much parabolic since October 2022, so the lows, and it's just been going up. It's pretty it's pretty steep in its rise. And if we look at this too, this seems like a pretty good reversal way, right? It's a V-shaped recovery. Or you could look at this as a three-way move to the downside. You know, we got the first move to the top of the bull market, came down, made a lower high, and we're to where we are right now. It doesn't mean that, you know, this is over. Obviously, it could push up more. I just don't think it will, especially if I look at the monthly charts and the weekly. The weekly's come down pretty considerably, so maybe there is a little bit of a move to the upside. But if we look at this monthly chart, right, it's completely overbought. I mean, this is at 99 and 96, and we still have, what, 26 days or so left of August. So pretty interesting how this monthly is going to close. But again, this is the first
17.
Is it 17? I don't know how many days are in a month.
It's the 14th, buddy.
I thought there was only 30 days. 31 then? Damn.
Yeah, 31.
That's a fun
All
month,
good.
I guess. Extra day of trade. I'll take it. Anyways, this is I don't even know where I am now. Oh yeah, here. This is DXY. Wrong chart. QQQ. Here we are. QQQ. Yeah, I mean, it just looks like it's topped out, right? I mean, worst comes worst, do we go for a double top at 408? Sure. I just don't think that we have the strength to push up at that point. I think a lot of the things that we need to keep in mind are also the DXY is pushing up. And I think that if he was going to shorting around here wasn't necessarily a bad idea, right? We said that on the show that the upside seemed very limited. And what I was talking about was a $20 move to the upside. I'm sure his liquidation level isn't $20 above where it closed on Friday. I'm pretty sure that his liquidation level is a lot higher. And I think he probably has capital to put in more if it's going to be going down. So that's what I think about the QQQ with his position.
So real quick. Let's do a little primer on put options and liquidation levels and strike prices. Because I think for some people, and this is not financial advice, is not us telling you to go do these things, but give the people a quick, 2-minute TLDR on what all of these things mean. Because they're going to be hearing on social media, oh, I wonder, what his liquidation level is, what's his strike price, all this stuff. Give the people just a quick understanding of what some of these terms are and how it would interact with, shorting the QQQ.
Yeah, absolutely. So, I mean, he's probably got to. The first thing is we got to see what his expiry date is. That's pretty much when this contract is null and void to the point where it's if it doesn't hit a certain price by then the contract is going to be canceled, right? Strike price is pretty much the price in which put or call option can be exercised. So once it hits a certain level, then that's when it's got to hit that level in order for it to be seen through. But yeah, I mean, that's pretty much the basic options trading. I don't trade options at all. Like I could, but I just choose not to. I think that when it comes to those, I find more profitability when I do just short in crypto. But for options trading, he's pretty much putting in a put, expecting the market to drop. I mean, you can put in other types of options. There's a bunch of different ones. There's long calls and stuff like that. But he's putting in a put, anticipating that the market's going to go down. His strike price is a level that obviously it has to hit for it to be exercised. And then, expiry date is going to be how long this contract is valid for. The problem is I'm thinking that this guy is probably got a long expiry date. So he's probably paying a little bit more per contract because he's going to have to hold it open longer. So there's a better chance that he's right within the time frame between now and the day it expires that he's going to make money because this is going to hit at the right time, right? So I think that it's probably at least a year that it's open, probably until September of 2024. I was just looking at some of the contracts earlier for options, and that seems to me, that would make the most amount of sense, especially just given his time horizon. Again, this guy was going short on the market in 2005 for the housing market, right? And I think his number one thing is he's going to probably, from what he's learned from that, is also that the markets, he can be right for the longest period of time, but still be wrong in between because he's just too early. So I think that if he is going to enter a position of this magnitude and want to make the most amount of money, I think that he's going to be thinking long term to the point that he needs to see his bet pretty much play out all the way to make the most amount of money. That'd be the smartest thing in my opinion. He's a pretty smart man, smarter man than I'll ever be. So I definitely think that if you're expecting his expiry date to be anytime soon, most likely it's not going to be. It's probably going to be long term. He's a macro thinker. Oh, you're on mute.
Absolutely. Chris, good to see you. Mr. House,
Thanks for being here,
Randy,
guys.
appreciate you guys being here with us as always. So that was kind of our little primer on the QQQ and SPY and what Burry's doing there. Let's talk about China a little bit. There is a lot of worry out of China, and it's in a few different areas that we need to we need to better understand. I'm trying to come to grips with. There's like this whole shadow banking group and all of these other things going on that I'm no expert in. So really a lot of the fear is around real estate once again. And if you've been in the markets for years, this is not a new situation for us. We've seen it play out before. Why don't you get into it now, Kev?
Yeah, absolutely. China's one that I've been keeping an eye on ever since I realized how much debt they hold to the US, right? So they definitely are exposed to US debt. And we're now starting to see their economy absolutely slow down. And we saw a few years ago that Evergrande was a huge issue. There were pretty much in real estate, it was something that people were expecting to be a black swan that could absolutely collapse. And if that collapsed, then obviously the exposure to the US would absolutely take us down with it. But what we're seeing today is that, there was Country Garden, which is a huge private real estate developer in China. They got downgraded, I believe, on Friday by, I want to say it was Moody's. And a lot of people are kind of afraid that this is going to, add to that capitulation in the commercial real estate in China. And they're waiting to see if this is going to get worse than it is, because we're already starting to see that they're trying to delay payments on a lot of these private private bonds that they had taken out. Obviously, we're going to see a lot of this continue to add up in China. Again, the problem with the not just commercial real estate, but just real estate in general, where people are living, is that there's such a high unemployment rate for younger people, right? And a lot of this money is tied up within these real estate developments. So if people aren't necessarily able to work and provide funds to start buying some of these properties, then there's no inflow coming in. And the problem with Evergrande was that people were paying in advance to pretty much buy like their apartment or their residential area within these building complexes, and they were using that money, borrowing it, and putting it into another complex to be built. And it got to the point where pretty much people were not buying into the next real estate complex that they were building, and now they don't have the funds to complete any of these buildings. That was the big thing with Evergrande, and it caused a lot of fear in the markets, and it kind of went away for a little bit, right? It seems like China got a handle on it, but now it seems like it's coming back with Country Garden. And there's a lot of these these trusts that are pretty much like shadow banks that are now pretty exposed to a lot of these real estate developments, and are definitely going to be causing
They're also missing a lot of payments too.
Exactly. They're
So
not, it's almost like delinquencies to the point where it's like, we need to be afraid because this is a lot of money that's, tied up. And we also see what's happening in China right now. We saw that the Hang Seng has been, on the downtrend since, that's the Hong Kong pretty much equivalent to the Dow Jones. And this is so bad because at some point China's definitely going to have to step in. And if they're going to step in and they have to pretty much make sure that they pump money into the economy, or they're going to protect their economy from absolutely deflating, they're going to have to make sacrifices, right? And the yuan is probably something that they're going to want to be, bullish on and take care of. And they're probably going to dump a lot of treasuries and, other equities and securities that they have overseas, likely to be in the U.S. market, considering how much that debt is. And that goes the same with Japan, right? We talk about the yen all the time. So the exposure to the U.S. with what's going on now in China, how they're just not making these payments, and this is becoming a bigger problem than it was 2 years ago, just shows you this is a cascading effect, and it's probably going to end up pretty bad. Whether some of these companies go under or if this absolutely halts the Chinese economy, that remains to be seen. But this is definitely not a good situation that we are seeing. I want to pull up the Hang Seng just because I saw something really wild. And this might be part of the issue with China reopening after COVID extremely slowly, and also just not pumping as much money as the U.S. did into the economy. So let's pull up the Hang Seng. We're gonna take a look at this, and I want to show you this orange line right here. I just marked this here so people could see this is the COVID low. So I'm going to delete that right here, and we can see that it bounced right off the 200 EMA on the monthly, right? Even though we hit that's the COVID low, I mean, it only went up about 47% from where it was at the COVID low. So we went about 47% to the heights, and it rose, I don't know, 9,967 points. But to where we are now is absolutely insane. We're very close to getting a death cross on the monthly, which is not a good sign, right? That shows me that there's not a lot of trust or belief in some of these indices. And this is one of the biggest one, along with the Shanghai Composite. I can't find the chart for that on TradingView, but it was only down a little bit today. Hang Seng definitely down a lot more. We could see that this is going to cross, and that we're also way below the COVID low, right? So this could be a really bad precursor to what we're going to anticipate in the U.S. markets. And that's why this is so important, because, again, just the amount of debt, and again, it always goes back to debt in this market that is, overexposure to. This is why we're seeing contagion. So if one of these real estate developers absolutely go under, or they just can't make these payments, and China has to step in, or China just says, you know what, fuck it, we're not going to help you guys, this could absolutely just cascade into the U.S. markets. Let's not forget how much of the U.S. is also invested in a lot of these properties as well, right? Just offshore money. So we have to keep an eye on that. But this is the scary part. We're crossed below where we were for the COVID low, and it seems like we're getting pretty overbought on the monthly. So it means that the COVID low is now resistance. That means we're going to be hitting our head on this, and it's going to probably come down. It's not a great sign, because if we look at, say the Dow for right now, right? COVID low was right here, right? March 20th. If you grab this and we go to the height, we went up 103%. The NASDAQ was up like 140% or something like that from the COVID lows. The Hang Seng was only up 47%, and now it's way below the COVID low origin. That tells me that because the amount of money that the U.S. printed, pretty much amassing more debt, that means that we're probably going to see something very similar. I'm not saying it's going to go below the COVID low, but it's very possible that it could see something absolutely catastrophic to what we're seeing with the Hang Seng. And the Hang Seng is not done at all. I think that there's a lot more room to the downside. Again, we haven't seen the true complications that have come from all this debt, and everyone's overexposure to a lot of this debt, with both within the country itself and also within global context. I think that we are going to see something pretty catastrophic for the U.S. in that regard. And again, we could take that to even looking at some of the currencies, right? Let's take a look at the Chinese yuan to the US dollar on the monthly, right? So we could see that the dollar, it's about 13 cents to one Chinese yuan. And if we look at this on the other flip side, for the yuan to the dollar, we see that it takes 7.25 yuan to equal $1, and it's pushing up. But it's pushing up in a way that could be a parallel channel. And I think that will break at some point. I think China is going to step in, very similar to how I think Japan's going to have to step in at some point and protect their currency, because the higher that this goes, the more it's just going to absolutely kill its citizens. Not kill literally, but it's going to absolutely, destroy their pretty much their economy. I mean, it's already failing significantly. And if we look at the yen real quick, just because the yen is absolutely insane to me that it's this bad. The yen is at 145 yen to one US dollar. I think that we're getting absolutely overextended here, and we're seeing deflation and inflationary pressures in Asia, and at some point it's gonna call bullshit. All this cannot be boiling up, leading to one catastrophic event, if for nothing. I think that we're going to see a lot of contagion that's going to break out from these real estate properties in China. It's going to bleed into the U.S. markets, and it's going to definitely bleed into the U.S. treasuries as a lot of these Asian countries start to sell off, some of their debt, and just try and save some face going into what is probably going to be a massive recession not going to say depression, but definitely a massive recession, because this is a lot worse than you're anticipating. It's a lot worse than people are definitely anticipating. And honestly, that's why I think that these currencies are absolutely insane right now. I think that we're going to start seeing a lot of these Japanese yen ETFs. Again, Burry bought them, started buying them. There's a reason why he's buying it. He sees that Asia's most likely going to call bullshit on the US, whether it's deliberate or not. I think that we're going to see, once the money runs out from how much we printed from COVID, we're going to start seeing something very similar to what the Hang Seng is looking like. Maybe not to that degree, but it's going to be a significant drop to the point where it's like, okay, there's not much more upside here.
Sorry, I was looking up a list of Japanese yen ETFs, so we could take a look at those at some point.
Yeah, maybe
that's something
this week.
That's a direction we want to go in. Okay, so that kind of sums up your part of the China thing. It's really the whole shadow banking, Zongzi, and with them missing payments on a lot of these higher yield investments that they are making is, once again, a lot of stress, a lot of uncertainty, a lot of fear into the Chinese markets. We're getting ready. We're kind of wrapping up the show now. Anything, the peso. I mean, anything else you want to look at before we call it a day?
Yeah, let's go to crypto, because crypto's been boring as shit, but you just need to know pretty much the high level, need to know of where this market is going. So let's take a look first at Total 3, right? So Total 3, there is something going on with TradingView right now that's kind of got a blip. I'm going to go to the daily so we can see it. This market cap for Total 3 is incorrect right now. From what I see, I cannot find where it added $18 billion in the 1 minute chart. I think that's total absolute, as Joe Biden would say, malarkey. I think that we are seeing something very important, though, based on this chart, though. So let's go to the weekly. It's a little bit better. And we can see that last week is also another important close that we got. We have this 50 moving average right here, along with the 200 EMA right there. And we are closing below this 200 EMA. Don't account for this one. That's this week, and there's a huge gap. That's not true. So what we're seeing is we're finding a lot of resistance on this 200 EMA, right? We got rejected from it, and we're coming down. We can see that volumes are, I mean, that's I wouldn't say extremely low yet, but they're lower than where they were prior. And we can see that the stochastic RSI is completely overbought at this point, and we are on the move to the downside. So every time we close below the 200 EMA, that 50 is going to get a lot closer to crossing this 200 EMA. And when that happens, we can anticipate that there is going to be a strong reaction from the market. And my anticipation is that we broke out of this parallel channel within this larger one. I think that we're going to come down to test some part of this channel, this macro one that we're in, to see if we are able to find some support within it. And we're going to get this death cross. And the death cross is going to be the most important one, I think, of this bear market, because that's going to pretty much tell you that alts have still a considerable amount to drop from where we currently are. So if there's anything in this market you need to keep an eye on, it's not necessarily alt prices. Obviously, if you're shorting this market, watch your liquidation levels. Just be careful. I don't want anyone to get wiped out, because there are absolute liquidity hunters out there. But if you're looking at this as a macro, high level of how the market's going to probably react, this 50 and this 200 are too close for us not to get, to find some cross at some point. We're finding resistance on this down here. We're overbought in stochastic RSI. There's no money really pouring into crypto, right? I don't see it anywhere. I can't tell you. I think if any money is coming in, it's going into Bitcoin. And if it is going into Bitcoin, it's likely going right out as people absolutely de-risk. So if we take a look at Bitcoin here, we're still trading in this parallel channel to the upside. I was very hesitant about this 34, 35. I still don't necessarily think it's 100% possible. I think it is possible, but it's just not, my confidence level in it isn't as high as it once was. That doesn't mean that, we can't get a wick up there, shoot up there over the next few weeks. But I do think that we are, winding down on our time frame before something does happen. And a lot of that goes along with what's happening with the alt market. I think that some catalyst is lining up with what we're seeing in the charts, to the point where we're going to see a massive capitulation event. And this is just for crypto alone. I think there's going to be 2 capitulation events that happen in this market. I think one's going to happen for crypto, and then we're going to see one on the global scale. But the one that happens for crypto is likely going to be likely to bring us down extremely low, and then we're going to see another capitulation event that doesn't impact the price of crypto. But for the time being right here, I think that we're putting in lower lows and lower highs. I wouldn't be surprised if we do push up a little bit higher, but the question is, are we going to be able to break that 31, 32 level that we've found so much resistance on lately? So if we are able to break that 31, 32, you're probably going to see a lot of people go long on this market. Maybe we see a bit of a short liquidation. They squeeze them out of their positions, and then we get to that that fair value gap that we see on the CME, futures. And once we fill that gap, there's a good chance that we could just, that's the end of this move. We could be moving to the downside. I do think that this is capped. So if we do want to look at where it could go to, that 34, 35K level, I mean, it's hard for me to believe that there's a 20% move in there unless something crazy were to happen, right? I don't think the liquidity hunters are going to want to dump that much money into Bitcoin itself. It's going to take a lot of money to push the price up that much. I think there's a better chance if you got retail excited, Bitcoin ETF or something like that, some type of BS news that could definitely pump the markets. That's why I'm kind of angry and hesitant when it comes to the Bitcoin ETF, because that's very similar to the XRP, SEC. It's not a security pump that we saw a few weeks back. So be careful in that regard. I think you need to watch your liquidation levels. Obviously, low leverage. Be careful with that. But if we look at this, I think this alt market is giving us a pretty good idea of where we're going. I don't think money's coming in. I think we're finding resistance because there's no more money to push into this market, and it's likely to go down from here. And again, I think there will be under $300 billion in total market cap fairly soon. I think we're going to see a massive red day. I can't tell you exactly when, but probably in the next 2 to 3 months, I think we'll be way below 300 billion. And maybe this is the way to the bottom. Maybe we have one last move to the downside, and that gets us to maybe the bottom of this channel. It'd be really bad if it's down here around 238 billion. It means a lot of money is just absolutely poured out. But I do think that this resistance is holding strong. And once we get that death cross, that's just going to make everyone panic even more. Some event is coming. I don't know what it is. Could it be Binance? Sure. I really don't know if that's going to be that. It could be something that we are totally not even anticipating. That's the way this market is. And, even if the charts are lining up that way and people are like, oh, nothing bad could ever happen, watch out. Danger's always around the corner. And I think that type of thinking is definitely the type of thing we talked about in that market psychology episode that's going to get you not killed, but it's definitely going to knock your teeth in if you're being a little bit overconfident in some of your positions. Be careful, be safe, but that's all I'm seeing with crypto. It doesn't look great on the macro. Bitcoin is a wild card at this point. Depends. But I just don't know if there's any more money that's going to push in and drive the price up for everything. I don't think you can save the entire ship right here.
That is going to wrap it up for today's show. We'll be back tomorrow, same time, same place. If you have not yet, hit those buttons down below. Like, comment, subscribe, share us out on social, all that good stuff. Appreciate everybody for watching as always. Have an awesome rest of your day, and we'll see you next time.
Take care, everyone.